journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at a trade that didn't work. I sent this out around 2 o'clock this morning, and we had a double pattern right here, just a beautiful ABCD is at 26.79, and we got blown out here for an $800 loss on this one. And the reason why the loss occurred is because the old cowboy missed one down in here. I still would have done the trade because I had two reasons to do it at that point. But as you can see, the next move was even higher than that up here. And as we were speaking here just a moment ago, the alert on silver popped up. And I want to bring this to you live and in color because we'll get this up and see where we are here with silver. A huge move here. You can see here's where we were last night. I want to bring this up here so you'll be able to see it a little bit. Remember, we look at the 382s quite a bit, and if you'll look at here the last few days here in silver, if you just look at this from this low right here, the pullback over the last couple of days was just right at the 382 here this morning, and then away it went. And that was one that just didn't quite work out. We look at this on the long-term daily. You'll see we're back up here, bang against the 618. Oh boy, we almost came within 3 cents of it, so it's going to be really interesting what we do here. We did have a few good things to report, and I'll just go through those with you right now. I sent the video out on the crude oil and the gasoline and the heating oil. I just wanted to show you how it worked out, folks. As we look at this, you can see I said look to buy the 382 retracements. Well, there was your pullback this morning from the Friday low right at the 618. There was your first 382. There was your second 382. That's a $4,000 move, and one of the most highly active accounts in the crude complex is heating oil. Now let's take a look at the heating oil. I ask you to do these because we did this for crude oil, but I ask you to do it for yourself for the heating oil to prove that it works. There's that same pullback. There's your first 382. There's your second 382. There's your third 382. Folks, that's 7 cents in gas in heating oil, folks. You know, 7 times 5 is what, 35 large? That's not a bad deal, is it? I'm going to be doing live trading, folks, all day Friday. Well, not all day Friday, from 9 to 12 on Friday here at TFNN. So if you want to join it, go to jacob@tfnn.com, and we'll try to line it up pretty good for you. But they're really good trades today, folks. I have to show them to you because we were following a couple markets for our good friend Tom Hugard this morning as the DAX was making this big ABCD up in here. You can see it's just a perfect 3 drive 1, drive 2, drive 3, just absolutely spot on early in the morning. And then I said, Tom, maybe pay attention to what happens after that. And there was the high. Bangs down, there's your 382, bangs down, another 382, bangs down, big move in the DAX. And guess what, folks? If you did the same thing with the old NASDAQ, look at that. We make new highs at 217.08 last night. And there's your first 382 right here. It went against you 30 points. You've got to risk 40 points when you trade this puppy because it's 1,000 pounds of gorilla. And it came down and went right up, and it's back down in this area right here. That is more than a $4,000 move. And if you'd done the S&P, but remember, we were short the S&P from 60.10 on Friday because that was that perfect ABCD. The Dow is very weak. The Russell is very weak. And be really careful, folks, because the folks at the main houses have recommended, everything looks good for 2025, and it probably is, but there is maybe a slight correction going into January, but we'll have to wait and see how that folds out. So anyway, there wasn't one person, by the way, that thought the stocks would be down for 2025, not one. So I guess we got to get in line here, don't we, boys and girls? Okay, now let's move on here to one other thing that I want to mention to you. We've got Jeff Huge coming up at the break. I wanted to show you, this is the one on the stock this is the ABCD. There's your 3 drive in the Dow Jones. We talked about that. We talked about the 382 on that. That came in at 44940 on Friday, and now we're trading about 300 points below that level. And, if it makes a new high, then all this stuff we're looking at is not worth cannon fodder. But, if it does work, maybe it'll work to an extent that might be life-changing for a few people. But gosh only knows that. So now let's move over here. We have a couple questions about some of the stocks that we follow. And let's take a look at Tesla, because, gee whiz, you talk about a market that really had a move. Let's take a look at it this morning. It opened at $400, folks. I don't know what happened. Rumor has it they caught Elon Musk walking on water this morning. And that's what caused this big gap up in here. That was reported by my figment of my imagination. Something caused it. It's probably something like that, as crazy as it is. But look at that. Look at this big move that we had here. Now, what do we talk about when we do this stuff? Maybe you can learn something. Yeah, sometimes they work, sometimes they don't. Let's go down to a smaller time frame, and we'll just take a look. Okay, there's that big move in Tesla. Then the market breaks down below the opening, and where does it stop? Has a nice little rally here and goes where, boys and girls? Why, by golly, it went to 398, and then she started coming down. Sometimes they work, sometimes they don't. But when they don't, boy, you get out of Dodge. Just like that one in the gold, you can't stand in front of it, folks. It's just not good. As we look at the Dow Jones today, you can see that it keeps fading and fading and fading. And remember, this is an 8-minute, but look at this on the hourly. Does anybody see anything bullish about this? Hello, operator. I mean, there's your head and shoulders pattern on Friday. That's what we said. There's your sell signal right there. Today, look, the market breaks really hard and rallies really strong. Let's see where it stopped, okay, just for kicks and giggles. Let's take a look at the left shoulder. That's the right shoulder. The right shoulder stopped. Went a little bit above the 382, it looks like. I can't get this thing. This is too darn serious. No, here it is. The comes in at 447, and this was 481. That's not. That's 30 points, 40 points. That's $200, and now it is $200 below, $1,000 below that. So market's not acting good today, folks. So let's pay attention to that as we go through this. Our guest will be Jeff Huge coming up in just a few minutes. And let's switch over to the currencies. The same thing we had going in the currencies. We look at these numbers. Remember, we're very bearish, these currencies, because they've had their rally. There's your 61% retracement in the euro today. If you looked at the British pound, doing exactly the same thing, only even more bearish. And that's it. That's the main one. The only one in that group that is really going wacko to the upside, much to my surprise, but I wasn't involved in it, was the Japanese yen versus the dollar. Remember this big bottom we had down in here? And then we had the big ABCD pattern that came in. There's your AB leg, and there's your CD leg coming in right there, right at the 786. And now we're having a run. Not surprising we're having a run, but where is it going to stop? Well, let's use something that we like to see, which is nothing else than ABCD. So as we look at that, we got a little bit more to go right here, which is up here at around 5180, about another 60 pips. So we want to look at this on the hourly. And as you're looking at this, bingo, bango, bongo. Let's take a look at this because we're almost there.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, we're back here, and I believe we have Jeff Huge on the line today. Jeff, are you there? Uh-oh. Gosh, I was hoping everything was going to work smoothly today, but evidently no Jeff yet. Next break, no, he's supposed to be on right now, as I recall. Well, maybe he'll be back soon. Folks, since we're on the air here with that, let's just get this back here. If you ever want to read something that I think is the most important thing of what's happening right now in living time, what we're looking at here, ask Jeff for his letter this week. It's 38 or 39 pages. It's got history in it that I talk about all the time, and nobody listens to the old Peckerwood from Terre Haute, Indiana, but you should listen to Jeff Huge. You know, he's a little younger than me, but does fabulous work, and he puts this all together technically and fundamentally of what's really happening and why. When you see the top 10 investment bankers, whatever they were, I just saw them pop up, every one of them all bullish, all looking at much higher prices, high as 7,100 in the S&P. That's a 20%, 25% up for a year. We haven't had 4 years in a row 25% ever, but that doesn't make any difference. But listen to what this young man's going to have to tell you coming up at the break, because it's really good. We got a minute here, so we'll go back to what I do, which is a little bit of, nothing more than ABCD. We left you here with the Japanese yen. We had that big 3 drive down here. We had this move right here. Remember the big ABCD that came in right there, and now we're having this move that we're probably going to be finishing. Overall, I still believe, this is 60 minutes, you're going to see this was the big move from where the high, no, that wasn't even the high. The high was at 160. Just show you how bearish this puppy really is. Oh dear, look at this. Holy moly guacamole. You got to pay attention to this one, boys and girls. And I believe we probably got our man in the house right now. Jeff, are you there, my friend?
I am on the line, Larry. How are you?
Okay. Well, I was taking my large tomahawk drum and beating it for Jeff Huge Enterprises because this last letter, I told you over the weekend, I said, you just blew me out of the water, because what Jeff did, he went back and looked what happened in history when something like this happened before. And if you don't get that letter that he wrote this week, don't go out to dinner for a month because I think it's $12 or, whatever it is. It was incredible, Jeff. Even the charts. I mean, I looked at there's only half a dozen of us that do this kind of stuff, and you happen to be the number one guy, in my opinion, that does it the best. So let's talk about the bulls hitting new all-time high. I was telling the folks that all 10 investment banks came out with S&Ps at 6,300, 6,500, all the way up to 7,100, 10 for 10. I don't think I've ever seen 10 in a row. Usually there's one bozo in there that might be slightly bearish or neutral, but these folks were all bullish. So I've covered all my short positions today, and I'm buying on the way down. That's what I'm doing. What are you doing?
My old mentor was Bob Farrell.
Oh, yeah.
And
yes.
Yeah, Bob had a list of 10 rules to remember. And rule number 9 was when all the experts say the same thing, something else is going to happen. And so I think that's kind of where we're at. If you look at how the experts were positioned coming into 2024, the average target on the S&P was like 4,800, maybe 4,860. Now they're all at around, I think, 6,700. So, my guess is this is going to be an epic fail in 2025. But you can tell just looking at how, even retail investors are positioned.
Even David Rosenberg, the Perma Bear, has turned bullish.
That's true. Yeah, I think when guys like that start throwing in the towel, that capitulation is a pretty interesting sign.
The good part about this, Jeff, I've been wrong for so long that people don't even listen to me. So that's really good from my perspective. No one complains. So please tell us what you're looking at today, my friend.
Yeah, so the Conference Board survey on retail investors, just consumer confidence about the stock market, reached an all-time record high last week. It's 56%, and we're talking about a general survey, but that's well above the highest readings we've seen back to 1987. And if you take a look at the percentage of people that think the stock market's going to go down, it's only about 21%. So, you're well over, say, 2.5 times bulls to bears on this particular survey.
Yep, sure looks that way to me. Now, you've got one here about the bullish consensus being is about a 20-year high also. Is that correct?
It is. What I've done is I've taken a look at every different cohort of investor, whether it's advisors, people like me who publish newsletters. We've kind of reached that bull bear spread peak again, well above 40%, which is typical of kind of the danger zone. In the case of the bullish consensus, that measures all the Wall Street banks and CTAs, and 75% of them are now on the bull side. And the last time we got there, it preceded a pretty significant decline. That was January of 2018, and there was a 10% decline immediately thereafter in the market within days. And so I think, when you start getting everybody on one side of the ship starts to list.
Yeah, well, this one's got, I think it starts with a T and ends in a C. It's a little movie joke, folks. Let's talk about net long exposure. The reason why it's none of my shut up, Larry, and be thought a fool than to open your mouth and remove all doubt. Please continue, Jeff.
The name exposure index is a survey of professional investors. This is the top 200 institutional investors, active money managers in the U.S. And they respond to a survey every single week. Well, it's only been above 100% on 4 or 5 occasions this year. We got to almost 99% on the November 27th reading, which gets you very, very fully invested. So again, it's not just what people are saying, it's what they're doing with their money. And this is where we are. We're very fully invested here.
Okay, now this was interesting, but someone said to me that insiders are always selling, but that's not true. Sometimes insiders are buying.
That's true. They're not always selling this much. And here's the thing, when you take a look at who's buying stocks at the top, that's important, but it's even more important when you see who's selling stocks at the top. And the insider classification is probably the most well-informed class of investor because for the simple fact, by definition, they have access to material non-public information. And so,
like
most
the cash
insiders,
register.
most insiders get on these program cells, these 1051B plans where they basically have it predetermined that they're going to sell X number of shares once a quarter, every quarter, no matter what. But here we had this big preponderance of institutional sellers come in all at the same time, and they weren't all pre-programmed sells. And so, at this point, you're actually taking a risk when you step outside of those programs, because, then you could be potentially, considered somebody who's trading on insider information. And so, whenever we see the most well-informed, class of investor selling at the same time in a record value of stock sold.
We're going to take a few breaks, pay a few bills for TFNN, folks. We got Jeff Hughes of Alpha Insight. Please stay tuned.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back with Jeff Hughes, Alpha Insights. Jeff, we have a question from one of our listeners. And do you do all this work yourself, or do you have a staff of people that help you?
I do most of it myself with the newsletter.
Okay, well, that's what I was assuming, so I wanted you to answer them, not me. That's the next one is about the king himself, Warren Buffett, who's alone now. Charlie Munger's gone, so looks like Warren is loading up with cash.
Yeah, he is. We were talking about insider selling, right? And the real question I think you have to ask is, what do these corporate insiders know that we don't know? And I think the simple answer might be that they know their stock is not worth what the market's willing to pay for it today. In the case in point, I would look back at, Buffett's right-hand man, Ajit Jain, who is the vice chairman of the insurance division at Berkshire. And back in 2017, I think, Buffett wrote in the newsletter, in his annual letter to shareholders, that Ajit Jain had created more value for Berkshire Hathaway than any other employee, and that if you ever had an opportunity to swap out Buffett himself for Ajit, you should just make the trade. Well, actually, Ajit Jain had never sold a share in 38 years. He'd been accumulating Berkshire Class A shares for 38 years, and in September, he decided to sell half of his stock. He sold it just below the all-time record high at that point, which was $716,000 a share. A pretty good sale. I think he cleared about $140 million on that.
Yikes. Wow. Now we talk about the Elliott wave. I have not heard a word from Elliott for a couple of weeks. I don't know. Why aren't they talking about something up here? That's what I'm seriously asking myself.
Well, I look at the S&P 500 this way. I think we've been in this final leg since October of 22. That's really, the fifth wave of cycle 5, so a fifth of a fifth. And it's been a difficult wave count to get correct because the market itself has just continued to subdivide and subdivide. Each wave is subdivided at smaller degrees. And so we're kind of in that final, minor wave 5, of intermediate wave 5, of primary wave 5, of cycle wave 5. It's just winding and winding closer to a close. And, we think we're going to get to somewhere between 6,055 and 6,219. That was the range we put out there. But in one of our publications, we have to make a strategic target call. And we, change it and adjust it every time we get through our target. And so back on October 1st, we put our target price at 6,100. Well, we got to 6,099.97 last Friday at the high. And, just 3 pennies shy of our stated target. And we haven't gone through it yet today. So, it's possible that the market topped. We had a pretty specific mathematical formula to arrive at that 6,100. And, the range could carry higher. We could get up to, kind of that upper boundary of the trend line, which comes into play at around 62.19. But, I think we're very, very close, within, 1% or less of where the S&P is likely to top. And I think the next big move will be to the downside. We can't really make a definitive call that the market's, topped until we break down below that that support line that we've got there, which is around 5,700 or so.
Okay, our next chart is the U.S. is the most expensive market in the world, not counting Bitcoin, of course, but this is pretty exciting here to look at this. Tell the folks what you're seeing here, Jeff.
Yeah, the U.S. Relative to the rest of the world trades at about a 71% premium on average. But, say, relative to China, which is the cheapest market in the world right now, it trades at about 133% premium. And so, we've been advocating, kind of fading the U.S. and kind of shifting into non-U.S. assets and non-U.S. equities. More specifically, we've been focused on Europe, because Europe is a country. It's really, from the standpoint of economic growth, it has 5 of the largest economies in the world within. It's got Germany, it's got the UK, it's got France, and those are big economies in and of themselves. And those markets are trading dirt cheap. They're down around 13 times forward earnings right now. And that compares to the U.S. trading at about 23 times forward earnings. And so, I think you're getting a pretty good deal if you're buying high quality European stocks. And so, a lot of people are like, well, okay, that's fine, Jeff, but which stocks specifically? So we try and dig a little bit deeper into that as well.
Do you when you trade European stocks, are these just on European markets, or are they also listed in the U.S. like through the New York Stock Exchange Index, because it has international markets in it too? So I don't trade anything, know nothing about it. So I'll let you describe what you're looking at here, because the London Stock Exchange is basically stocks from all over the world other than London. And the DAX has got all the German stuff, which is big. Is that a big market for you folks to look at too?
Well, it is. And the way most people trade them is either through U.S. ADRs, American Depository Receipts on the New York Stock Exchange, like you mentioned, or through ETFs, which is a very inexpensive way to buy a basket of stocks. And so we prefer to trade ETFs because they're super liquid and they trade on U.S. exchanges.
Okay, makes pretty good. Now we're going to take a look here at the, I really like this because I can see the years going back through 1950. In fact, my first trade was in November of 1959. And so I remember this. And most people don't realize, if you look between 1965 to 1979, the Dow never went above 1,000 for 13 years.
So this is a relative chart, Larry. This looks at the U.S. stocks relative to European stocks. And so if we take a look at that, U.S. relative performance is now nearing 4 standard deviations above the 75-year mean. That's a ridiculous, spread. And so, I put the question out there, if not now, then when? Is it a good time to take a contrarian bet on European stocks? I think now is the time. 4 standard deviations.
Wow. That's out to the 90. That's a 98th percentile, Jeff.
Well, I think the odds are something like, 785,000 to 1 or something that you would get to a 4 standard deviation move. And so the odds are very, very low that this is going to extend further. And so I think at this point, you start to fade U.S. stocks and you start to buy European stocks. And we've got a good idea where you can start.
Jeff, you mentioned about the Chinese market. That's been hit pretty hard it's been in a bear market for 4 years. Are you starting to see value in China and Hong Kong? Because I love Hong Kong. Yeah. That's one of my favorite cities. Yeah, I agree with you. I have some friends that trade that, and it does look, when some of them are so cheap that it's just ridiculous. Alibaba used to be $375, and now I think it's $80 or something. So, hey, we'll be right back with Jeff Hughes, Alpha Insights, folks. Stay with us, please.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, Jeff has just posted this chart here of the European stocks and how cheap they are relative to the U.S. stocks, and you can certainly see that they are. Jeff, I don't know if you know this or not, but mathematics is one of my specialties. I was in the 5th grade for 3 years. I was in the 6th grade for 2 years, and in the 7th grade, I made it through in a year. And I know this, when you can buy something like your letter for the cost of a Big Mac, $12, that's the meal, with French fries and drink for $12. And if they don't look at that letter that you wrote this weekend, plus they get the whole month, they're missing a big deal, because that letter was, gosh, I was like going back into history. I really liked it. Let's move on to the next chart here, because I don't want to. Here's one. There's worse. There, you got a great breakout here on this one. Spain, and I like Spain too anyway, so.
Yeah, the reason I chose Spain, there's really 2 reasons. It's cheap, right? Because we're looking at the valuations, very, very cheap, trading near its 40-year lows on a valuation basis, but it's actually done very well. Spain, as a market, the ETF is up some 31% over the trailing 12 months. And so it's keeping up with the S&P 500, but it's not as extended, right? It's breaking out of a base, and this base really goes back 15, 16 years. And, this decline off the 2008 highs has clearly been penetrated, right? And we've taken out some resistance. We have some minor resistance at about 36, but I bet if we can hold this $30 level, and I'm betting we can, and break out above 36, I think we can see a pretty good run in the stock. I'd say at least $55 on the upside, possibly even $65 looking longer term. But we've got good momentum behind this. It really just looks like a nice basing chart that is, just going to work its way higher, right? And so for, a real investor, a patient investor who wants to own something for a long time, I think you fade the U.S., you start buying these markets that are just washed out and basing, and not worry too much about whether or not you own Amazon or Microsoft or Apple, but just own the entire Spanish market and just wait for it to come to you. And I think it will. I think there's about 50% upside from where we're at right now.
Okay, now we got a chance to talk about the newsletter, and please tell the folks, you got to look at this thing. It's really great. I read it 3 times. It's 48 pages, isn't it?
Yeah, I think so.
Yeah,
we got a little carried away this year, or this month, because we wanted to talk about something that I think is really germane to next year, and that is the new administration coming in is really tough with tariff talk, right? And tariffs can have a really negative impact on margins and earnings. And if we take a look back at, say, the 2018 period of time, where the last time Trump was in office and he pushed for this protectionist trade policy and raised tariffs significantly, it had a really negative impact on earnings and margins. EBIT margins were down 60 basis points and earnings were down 4%. And we think that could be at least, that or worse, because he's talking about tariffs in the 25, 50, 100% range in some cases. We did the historical look back to the worst tariff in history, which was the Smoot-Hawley tariff in 1930. And it really, shook the world. It really shook Wall Street and resulted in, I think, a much weaker economic environment. And it really pushed the country deeper into the Great Depression, which probably wouldn't have been the case had they not gone down that road, at least to the same extreme. And so, we thought that was an interesting, kind of analog to take a look at. But we also did a really deep dive into investor sentiment and a couple other things, as well as our regular market analysis. And I think we kind of made our case that if you're long equities, you should be very, very careful here. But that came out on Saturday the 7th. Yeah.
Yeah, I remember because I read it the 7th, 8th, and I read it again this morning too. So I just want to make sure you were coming on today to let the folks know how important it is. And usually I don't beat the drum that much, but I have a new drum, and so I just want to let you know it was great, and I really appreciate it because I study the history of that stuff because I have an interest in it because people don't realize in 1929 there were 2,200 automobile companies. We had things like coming out. We had the air conditioning, electricity, telephones, air travel. The Empire State Building was built because they finally had electricity for air conditioning to get the air up and that stuff. Record players,
and the
radio,
elevators.
Interstate highways, and that was just a few. There's many, many more. And we had many of them this time, too, but that doesn't mean you can't do it. When that market dropped in 29 from 383 in the Dow down to 42 on July the 8th of 1932, it was down 94%. It was the greatest buying opportunity in the history of the world. But people don't realize it took 26 years for the market to make a new high above 383. It wasn't until, I believe, 1955 that it finally got above 383, as I recall. So got to be careful in here, that's for sure. Listen, I want to thank you for being our guest today. I've got the listing up here, WWJWH Investment Companies, the website. Your Twitter is @alpha_insights. I don't know what Blue Sky is, but it's @Huge Insights. What is Blue Sky, by the way?
It's a competitor to Twitter. It's brand new. It was started by Jack Dorsey, the same guy who started Twitter originally.
Oh, my goodness. How did he allow him to do that? I thought that would be in an agreement. And then you have Substack, too, which is hugeinsights.substack.com. So please
that's where
keep
you
this
find
good
the
stuff coming.
directly.
Keep the stuff coming because it's really great stuff, Jeff. And thank you for joining us today. It was really, really great to have you on.
Pleasure, Larry. Thank you so much for having me on the show.
You bet. Jeff Huge of Alpha Insights, folks. Really great stuff. Okay, we got a few minutes here, so let's get up here and take a look at what's going on in the world here. Looks like the Dow Jones rallied about 100 points in here. We've got a little rally going here in the NASDAQ. Let's just take a quick look and see what it's doing here on the day. There was our high right back here last night, and let's take a see where we are right now. We've got a really nice ABCD forming here. There's your ABCD. And that's coming in, we're right about the old 382 right about now, just a tiny bit above it. So it's still in the longer term. It does have a possibility of backing off a little bit, but we are having a good rally. It's rallied about 100 handles here, which is the strongest rally of the day thus far. The first rally, that was 100 handles too. So it's in a minor downtrend right now. But remember, we had all of the investment houses are saying this thing's going to go quite a bit higher, so we'll find that out. Now we'll move over here and get over here to these currencies and things, but let's look at this Dow Jones because that is the weaker of the group, and you always want to try to sell the weaker. So here's where we are just on a 60-minute. There's our high for the early morning, so let's go down Sorry about the noise, folks. This is it's one of those days here in Tucson where we do the electrical stuff. Anyway, there's our high from early morning, and you can see as the market's coming down. Want to watch this because we're probably, coming into a 382 retracement right now, up about 120 points from where we had. In fact, in the last 13 minutes, we've rallied 100 points in the Dow Jones, and there's where we are right now. That's the 382 of the early morning high. Now, this goes way back to Sunday night, but this is where we are right now. And if you look at this on a real short-term basis, and this is what a 13-minute chart is, you can see here that we have, a down sloping line like this, and that sort of makes this, well, it's a 135 pattern on a short-term basis. We'll be...
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the S&P as we started the show. And unfortunately, I just saw this a little late, but there was a beautiful ABCD setting right at the basically 61% retracement. You can see we've completed the ABCD pattern up in here. Now, what we're going to do now is we're going to blow this up so we can go back and see where we were from last Friday, because that's when the high was made. Let's get this over here like this. There was our high. If you remember, we made that big ABCD on that one. We already pointed that out on the hourly basis. And now, as you can see, as we're watching this morning, we want to go and measure our swings, because we want to measure the new low, which would have been right there. You got to measure what the 382 is going to be. And as you can see, as you can see, would it be? I don't know if that means much or not, but that's what's happening right now. To reiterate that sale on the S&P, there it is right there. You can see A, B, C, D coming in at 609. That's the 10. The high was 1250. You'll see we've come down. The little rally we're seeing right now is basically setting right there at pretty close to the 382. You know, that's where we are. Now, folks, if we get above this level right up here, 61.15, then these boys on Wall Street are probably going to be right, and the thing's going to go up forever and ever and ever and ever and ever. But we won't know that for a few days or a few weeks. Maybe even tomorrow will be up above that. But that's what it's happening right now. So when you watch it, keep a close eye on these crude oil, heating oil, and gasoline, folks. They made a major turn, big moves today. And if you followed the old 382 stuff, you had been right on top of it. And that was in the video that we sent out. So let's keep our powder dry, live every day in an attitude of gratitude, and may God bless. And we'll see you tomorrow. Our guest will be my good buddy from 1965, the senior trader, none other than Peter Eliades. He's going to be talking to us about the 92-year cycle, which will be fun. We'll be right back tomorrow, folks. May God bless.